Hello, everybody. My name's Drew Demon, and I'm the Devil Stockbroker. We were just discussing, honestly, just how nonsensical the market is being lately because apparently everyone thinks that, or at least the Wall Street Journal thinks that Fed is just going to stop tightening, and there's talk of a 50 bips hike instead of a 75 bips hike, which is literally in direct opposition to everything that the Fed has been saying for the last, like 6 months. I can see the case that Persephone is talking about with fake softness until the midterms are over. I
Yeah,
could see that because
yeah.
right
This one's
now
yeah.
October is such a like an uncertain month for the market. There's no reason for them to rock the boat if things are like stabilizing as far as they're concerned. But I really do think that this is just setting us up for a much bigger, more painful rug pull.
It gets wild. Like Snapchat's earnings last night came in so bad, or I mean, their guidance, their earnings were good, but their guidance they didn't even like they refused to give it, and it started to hurt the other tech players.
Mm-hmm.
And then today we're rallying throughout the day because the Wall Street Journal essentially put out an article saying that the Fed was considering reducing or pulling back on its rate hikes. Like
it
you can even see
literally,
in
it literally makes no sense at all.
you can see in the comments that I snapped and put in the group chat thing, like you can see in there, like she's talking out of both sides of her mouth. She's like, we wanna reduce our rates. We want to pull back on our rates, but the data isn't cooperating. Like no crap. Like that's everybody understands that. That's why you're still hiking the way you are, because the data hasn't shown you that you shouldn't be.
Yeah, there's no, they don't have a basis for the actual statements that they're making. They're just trying to be, they're just trying to not upset things any more than they already are. You can't both, you can't both over tighten and under tighten at the same time with the same decision. Like you're going to do one or the other. I'm still waiting for this. I'm still waiting for this ascending wedge to play out.
I guess that's sort of what I was calling yesterday. Like at the end of the day yesterday, I was looking at stuff where I was like, I don't want to enter puts down here because it still has. This was the move that I was worried about, which is absurd. Like I wanted to get into something for overnight, and it was just like, I don't know, man. There's something weird about this that it looks like it's out of support trend line that it could still pop again and push into that 371 region. And I was like, as I said it yesterday, I was like, that's probably not going to happen, but it could. And then today it's not even 2 o'clock, and we're already up testing those levels, and it's like, holy hell.
I guess what I've ultimately arrived at is that between the Fed speaking softly into everybody's ears, telling them what they want to hear, and just confirming their own biases, like literally playing both sides of the fence, saying like, we don't want to over tighten, but we don't want to not tighten enough at the
Right.
same time with the same decision.
Right. Like
And
we
the
know
Wall
that,
Street
guys.
Journal sitting there saying like, it's only going to be 50 bips. It's fine. Like, you're fucking kidding me?
So guys, like we know you don't want to over tighten. We know you don't want to under tighten. That's what the job is. Like it's literally your job is to not overdo it and not underdo it. Like that's what you're supposed to do. We understand.
It almost seems like they understand too, and it's like they're making the actions they need to do to protect the markets, but they're also like then coming out and saying, yeah, we don't really want to be doing this.
Yo, HYG broke its ascending. It's broken its ascending wedge. It's already broken through and closed below. Like it's now it's now testing its 200 period moving average on the 5 minute. It's bear flagging already, getting rejected by the 9. What is going on? SPY. The SPY is wrong here. Okay, bond markets do not lie. Bond traders know what the hell is up. This is all somebody trying to prop this market up for some reason. I'm really convinced at this point it's market makers trying really hard to get their max pain. Right now, 372, 374 is right around the sweet spot where they get the maximum hurt out of all the retail traders and all the institutions on their trading floors. Yeah, welcome to the stream, Persephone. Yes, the news update is the SPY is wrong. But like, in all seriousness, let me go put this up here. All right, I got the SPY here, and I'm gonna put HYG here also. Actually, you know what? I'm gonna put it on a new pane. No. Give me 2 seconds here.
Crap, that was from today?
Yeah.
Okay.
Huh, interesting.
So HYG moves with SPY 9 times out of 10. It's like moving perfectly in tandem. But just occasionally, you will get these moments where the SPY and the HYG do not agree. And I'm going to show, I've talked about this a lot, but now I'm really going to give you a one-to-one comparison where this is undeniably true. Let's go to the daily chart for this. All right. So moments when the SPY and the HYG did not agree, I will circle them. You had here where SPY was making a diamond top. Instead, HYG was just going straight down, okay? And it was doing this a full 3 days ahead of this move to the downside where the SPY just started tanking, okay? Again, right here, you have HYG moving down as the SPY is peaking on a diamond top. Over here, you have a peak here. HYG printed red a day early. What else do we have? SPY was ripping up to the upside this entire move. HYG going sideways and then closed low. It predicted this peak here in March that entire week. The entire week the SPY was ripping, HYG was just middle of the road, not going anywhere. It was range bound. Bond traders did not agree, okay? And this is a consistent pattern that you can rely on in the market, that when markets do not agree between bonds and the SPY or the stock market, you can trust that the bond traders know something that the market does not, because very, very few traders, day traders, retail traders, hedge funds, small-time institutions, mom and pop hedge funds, these guys do not trade bonds. They do not provide enough of a return. It doesn't expose them enough. They can't get enough of the risk. They rely on stocks. The institutions, the smart money, the ones that must have stable fixed income, stable returns, and collateral assets, they rely on bonds. They'll rely on junk bonds when they want to have a little bit more risk exposure, and they'll rely on investment grade bonds to ensure a fixed rate of return. They'll use treasury bonds. That's the 1, 2, 5, 10, 20, 30-year bonds from the U.S. Treasury. That's what they'll use for collateral, along with T-bills. But we won't get into all of that. The point is that smart money institutions, they trade bonds. They rely on bonds for their fixed rates of return. They use it for their collateral. Whatever the bond market is doing will let you know where the attitude of institutions are. When institutions are risk on, bonds will rise in value. Not yields, but value. HYG, that's high yield junk bonds. Those going up indicate a bullish sentiment from institutions. When it's going down, it's bearish sentiment from institutions. And when the SPY is going up while HYG is going down, or if HYG is just not moving while the SPY is going up, then you know that the SPY is wrong. It may take time for it to play out, but something here isn't quite right. So whatever's going on today is in disagreement with what the bond market is doing. And you can nail this down to as close as the 5 and the 15 minute. So this is something that you can rely on for even as small a time frame as the 5-minute chart to take day trades on. When you see HYG disagreeing with SPY where they're moving in opposite directions, HYG will 9 times out of 10 tell you ahead of what the SPY is going to do. And right now, you see the SPY moving like this, where it's just it keeps defying these technicals of this ascending wedge. Well, HYG disagrees. And HYG has already made its decision. HYG already broke through. SPY still going up. That tells me the SPY is wrong. So it's a, I'll just go ahead and say it's a gamble, because there's no way to know how this works out at the end of the day. There's a lot of money pouring into the SPY in order to keep it propped up at these prices. But right now, we are sitting at a tremendous amount of resistance that it just can't seem to break through. And all these market makers are really desperate to get all their money from here. They want to keep the price there so that they can expire all of those options and futures contracts such that they are useless. So we're going to go and see what happens, but keep an eye on SPY, HYG, 10-year bonds, VIX, Dixie. All of these will give us at least some idea of what the SPY is going to do. Looks like Dixie is starting to actually bounce right now off of its ascending support trend line, and VIX is getting more and more risk on. So we got a lot of conflicting signals, but this one here that I have seen has consistently been right. So if SPY does not dump here before the end of the day, then it will be the first time in a long time that this signal has failed me. And that's where I'm placing my bets.